Welcome to another episode of TRVC. Today, I have as guest Merve Zabcı, who is general partner at Metis Ventures, a VC in Turkey and the region, also a data-driven VC firm. So excited, a lot of things to talk about. Welcome, Merve.
Hi, Yunus. Thanks for having us.
It's a pleasure having you on the podcast today. As I mentioned, I think there's a lot of things to talk about Metis Ventures, about it being data-driven, focusing on Turkey and the region. But I wanted to just start off with getting to know you. What was your career path? How did you end up in venture? And then we'll talk about Metis Ventures as well.
Sure. So I'm an engineer by training. I studied industrial engineering. Most engineers don't consider us as, engineers, so to say. But,
There's a line, if something has science in it, like political science, then It's not really a science. If it has engineering in it, maybe it's not engineering. I don't know.
That's what I wanted to say, actually. So I was always good at math. I knew that, my skill sets would be better fit for a math track. But I didn't know what to study, actually. So that's why I wanted to be as broad as possible. That kind of led to my career going forward as well. During school, I had a bunch of different internships at supply chain planning, at different parts of industrial engineering, and even marketing. And then I figured out that I want to be involved in a place where there are actually like numbers, facts driven, but also multidisciplinary. So that's why I went into investment banking right after school, which was a great 2-3 years. Here in Turkey. And this was back in 2006 and 2008, which was one of the greatest times to be a banker in Turkey because there was a lot of privatizations, a lot of international interest. It was like opening of a nation, so to say. So over a span of 2 years, we underwrote $20 billion worth of transactions, including two of the still biggest IPOs in the region. One of them is TAV Airports and the other one is Türk Telekom. Maybe you're familiar with the TT's IPO, given it's in your space. And then after, a very robust 2 years of, an engineer trying to be a banker kind of an experience, I realized that I want to have more say in the companies that I look at. I just didn't want my mandate to be over with the signing docs, and I want to be actually say something about who is going to sign, what are we going to sign, right? Instead of just advising the both parties. So that's why I took a job in private equity right after. So I worked at a regional private equity firm. It was called ADM Capital back then. Now the team is called CCAT. And we had a regional mandate covering back then Russia, Ukraine, Romania, Bulgaria, and the Turkish markets. So it was a great experience for me to get that regional exposure.
Great experience also because it was fairly early on in the VC ecosystem, developed over time, but even the private equity ecosystem, which was a little bit earlier in Turkey than the VC ecosystem, but that time frame was still fairly new for the private equity ecosystem in Turkey as well.
Yeah, there were handful of firms newly emerging actually. So I was doing PE between 2008 and 10 in Turkey, and that time again Turkish economy was booming. There was a stable currency, and our GDP growth rate was stable, almost double digits. FDI was pouring in. So that's why there was a lot of interest from a lot of global firms too. Carlyle opened up an office here. There were other Gulf VC firms, they MENA-based private equity firms. They were also opening up small offices in Turkey. So it was a lot was happening, but it was new. Correct. Turkven, Aktera, they were just working on probably their first or second funds, etc. So it was a good period to be doing all this. After spending a couple of years, I thought that, let's go to the US. Let's see it in the, more deeper markets where actually you can do more with debt products. You can do more structured products, etc. So I did my MBA at Chicago. That was that kind of helped me to transition into the US market. Then I worked at a large firm. I think throughout my career, I was just trying to explore. I worked at a hedge fund, I worked at a structured equity, structured debt kind of a firm. And then I moved to New York to work for a multifamily office. That's when I started to know more about the tech deals, so to say. Because when I was leaving Turkey, the only startups was Turknet and Yemek Sepeti, which were actually established firms, but they were doing something in tech. That's why everyone called them, so to say, startups. So it was only handful of firms. So when I took the role at this multifamily office called AGI Partners.
I remember, by the way, coming to I wasn't living in Turkey yet, but I visited, it must have been like 2003 or 4 or something, maybe earlier. And there was a tech meetup of like everybody in tech in Istanbul. And it was like one room. Sorry, I was just
exactly, right? So, I mean, we can discuss about why it was like that, but so I always give our team this example. Like when I was investing in tech deals in New York, like the average valuation that we were seeing was around like for pre-seed deals was around like $1-2 million. So this is like back in 2012. So, everything evolved so quickly, with the democratization of technology, with the excess capital, trying to find where to go, etc. So we have seen this like very fast acceleration of everything in the tech and VC space in the past decade, which kind of like reflected in the Turkish market as well. Yeah, but back to my story. So I took a role at this multifamily office called AGI Partners. We were doing both like lower middle market private equity, but also we had a growth equity side as well as an angel portfolio side as well. We were very flexible given that we were managing capital for families. And that's when I started doing tech investments. And that's when I realized that I can be a student forever and keep on learning instead of, looking at yet another retail deal or yet another manufacturing facility, et cetera, et cetera. And also I love the fact that with small touch, that actually you can change something in the destiny of a company by helping them out. But in larger deals, in a situation where the company has $1 billion revenues, it's very hard to make a difference there within the time frame that we have, which is like 5 to 8 years. And within that time frame, it's very hard to make the transition and create or change the destiny of a company and create a success story, unless you are using a lot of financial engineering products. So that's why I loved working together with entrepreneurs, understanding their dreams, understanding their vision, understanding what they are building. And each company was actually very new and very something that I had to educate myself about before each meeting. So that's what excited me. That's how I fell in love. So this is back in 2012. And then fast forward, a decade almost, I'm here.
Well, take us through some of those steps as well. Because did you move from the family office to VC in the US, or at what point did you come back to Turkey?
Yeah. So we were doing it all within the family office. We had multiple buckets and different families with different interests, let's say, in terms of investing. So we had one family, which they wanted to have a small angel portfolio. So we were also leading that. Like we had different teams helping out with different families in that respect. And I was able to be involved in those deals. So that's how I was able to get like a 360 view of where to position myself, what does it mean for Turkey, et cetera, because seeing it in New York kind of helped me out because it's a much more developed market and there were much more faceted transactions that you can execute on. So I did that for 5 years in New York. Then 2017, after the Q, because I'm an only child, I decided to go back to Turkey because my parents are aging. This is purely personal choice. So I took 1 year sabbatical from work and I moved to Turkey. And 1 month after I moved to Turkey, I met with my current husband. So that kind of shifted things for me. But when I was moving back to Turkey, I knew that I need to be in a place where I can merge the US market and the Turkish market. That can be very valuable. That's what I had in mind. And I thought that I should be definitely in the tech space because when I observed or when I look at the Turkish market, it has been developing quite rapidly.
So you saw that the tech space in Turkey was developing rapidly, or just so you had a foresight of that?
It was very hard to miss because when I was leaving Turkey, right, 2010, there was like 1 or 2 companies. But when I was trying to move back, this 2017, 18, like there were a lot of technoparks, there were accelerators, there were like angel groups people were talking about. When you read the speeches of like large conglomerates, they were talking about startups. So it was on the mainstream now. It wasn't just, a handful of young people trying to build something.
It became mainstream, exactly. That's a good way to put it, yeah.
So, and it was becoming mainstream. So I really like that because when you look at the demographics of Turkey, it's a very large population in the region. It has a very large young population. And I know that we have a very good educational system. Like our technical schools are very, very good. Maybe we don't market them as much as we should, but I mean, you were, in the US when you at Stanford, at MIT, there are a lot of good Turkish engineers. They are building a lot of good products. So that means that Turkey has that. And most of them actually go to US for their advanced degrees. So they get their undergrads in Turkey. So I thought that there's a lot of value that we can actually create from this ecosystem, right? And because the times were changing too, it was everything was much more mobile. It's easy. It's the world is much more connected than the early 2000s. So I thought that I should definitely try to do something in the space.
And then
I first started doing angel investments.
Okay.
And I lost money. You have to lose some. Yeah. I was also doing some angel stuff back in US too. I signed up for an angel group to, develop my network, etc. And then we were always in talks with my college mate, Eid, and he was also transitioning from public markets to private markets and the VC space, with a very similar story
Eid
of
Aslan.
mine. Yeah. And then we joined forces and we created the platform or the firm that we have today.
Okay, great. Let's talk about Metis Ventures. How would you describe it? Because I know you have actually more than one structure and more than one fund.
Sure. Nothing is easy in emerging markets. So if you're a first-time fund manager in emerging markets, it's not easy as well. So you have to start from somewhere. So the way that we started was that we initially set up 3 funds, all Turkish local structures, GSYF, Tech One, Logo Ventures, and 20.
How do you write 20, by the way? Is it the numbers 20 or do you write it TWO?
TWO0. And then after several years, we figured that it's very hard to manage 3 different brand names. So that's why we kind of created this umbrella Metis branding, and also decided that from now on, because the same team was managing all 3 funds, the same team will establish Metis Venture Fund 1, and we will continue to have our funds under the Metis umbrella so that we don't have this multiple branding problems.
So I love this actually, because it's you're building a venture firm, basically. This is the way I see it, is that Metis Ventures is your firm, and then you have funds. So that makes sense to me as a kind of mental model for it.
That's a very good point, Yunus, because what we strive to be going forward, not today, is that to be a multi-stage alternative asset platform from this region, which this region doesn't have. So there are a lot of very good firms, but they're mostly in the single stage, either Series A or pre-Series A, etc. But we strive to create a platform where we can be day 0 to IPO, but in the going forward in the next decade. This is not going to happen overnight, but that's our ambition as a firm. And I think that's how we can actually build our own equity value too, right? Because we are entrepreneurs too. We started something almost from scratch. So that's the ambition of the firm, actually.
Curious to learn more about these different funds. So Logo Ventures is a large software company, accounting software company.
ERP accounting, yeah.
ERP and accounting, successful. You mentioned Turknet and Yemek Sepeti, but we could count Logo as maybe one of the early tech companies in Turkey. Shout out to Turul Tekbulut if he listens. So Logo Ventures is kind of a venture arm connected to Logo, or how was that?
We kind of, when we were working on Logo Ventures 2, Logo Ventures 1 was already there. So Logo team and their back then backers like Mediterra was a PE firm that was invested in Logo. So together they already established Logo Venture 1, and there were 2 deals that were made out of that fund, Whisper and VCount. And after that, Logo team was enthusiastic to do more, actually. So we came together with them and we decided what would be the ideal structure going forward for Logo and also for Logo Ventures. And we decided to open it to third-party capital too. So that's how you can make sure that there are alignment of interests so that entrepreneurs can be happy to join forces with you, so to say. Because with CVCs, there are always this question of are they going to do an hostile bid or would they want some kind of terms that are not standard? Would that be problematic for my future, etc. So in order to avoid those, so what we did is that we created a fund, so Logo is the anchor LP. 50% or maybe 45% of the fund is coming from Logo, and then the rest of the fund is coming from our own LPs, which are mostly institutionals Turkish institutionals. So we created this vehicle. We have been investing out of Logo Ventures too since 2021. Now we have almost 24 companies with a lot of good. There are like good ones. There are like some mediocre, performing portfolio. But it was great for us to partner with Logo team because they are great at building scalable products. They're also great at go-to-market. They figured something that is very hard to do, to sell to Turkish SMEs, and they kind of dominated the Turkish middle market for ages now, and that's something very hard to achieve. It's not easy to sell tech to Turkish SMEs. Yeah. So their experience has been very valuable to our team as well as our portfolio.
They have experience. They're now a public company. There's experience doing an IPO as well. So that's
undertaking a PE money and then existing in IPO markets too. And that's
very relevant experience for startups who might want to go the same path.
Exactly.
And then 2.0 is media focused, is it? Or
like
digital media?
Sports media, not just media, but sports media entertainment. So like our portfolio out of 2.0 includes like Blue TV, which we exited to Warner Brothers. We have like a sports clubs ERP software under that portfolio. We have like Pabino, which is like a smart, like AI-driven smart tab provider that now sells in Madison Square Garden. So anything that touches the media, entertainment, and sports industries, anything that caters to those industries to be more smarter, more tech-enabled, we have invested in. Yeah.
And the third one is Tech One.
Tech One, correct.
And what is the thesis or idea, philosophy behind Tech
Sure.
One?
So Tech One and Logo Ventures may be somewhat similar, but Logo has more B2B focused, given Logo's roots. And Tech One is more like B2C focused, slightly. Both of them are early stage funds that wrote checks up to $1 million for initial checks, and pre-Series A.
Can you share the sizes of these funds?
Sure. Each of them are approximately 25 to 30 million. So in aggregate, we deployed around 75 million. We continue to deploy because a certain portion of that of the funds are put aside for follow-on capital.
And you have a fund structure outside of Turkey as well.
With the initial 3 funds, let's say Metis version 1, we had 3 Turkish schemes, but with Metis, we have a Dutch structure as well as a Turkish fund structure. Actually, we are one of the few funds who was able to create a structure with the new legislation. The Dutch fund is going to be actually deployed through a GSFI structure as well. Yeah, as I said earlier, it's very hard to be a fund manager in emerging markets. So that's why we try to make sure that if anyone is interested in venture, LP-wise, we kind of can onboard them through our structures. So that's why we have Turkish structure and the Dutch structure for overseas investors.
And are you raising a new fund, or is there a new fund on the horizon?
Yeah, actually, we are about to do a very healthy first close for Metis Venture Fund 1, and we are planning the fund size is going to reach around 100 million euros.
So that's a somewhat larger fund. Is your idea to be a little bit more later stage with those investments, or?
Great question, because we spent maybe 6 months trying to figure out where we should be as a firm, because, given our background in banking and in private equity for over a decade, same as he dealt with very large companies as well. So we thought that we do have the skill set to be in Series A and plus. Should we be there, right? And as a firm, you can reach more AUM that way too, right? But then we spent, again, 6 months on this subject, and we decided that not to be. And we still see value in this pre-Series A space for backing Turkish and Eastern European entrepreneurs. The main reason is that there seems to be an inflation of different, smaller funds in the Turkish market and in the region as well. And these funds, they typically write up to $1 million check. But that's not enough for a company to realize its full potential.
Even in pre-Series A?
Even in pre-Series A, exactly. The data says that, and we do have that data since we have been spending a lot of time and money on understanding our data coming out of this region lately. You have to start with at least 2 million. Otherwise, it's very hard to get the attention of deeper-pocketed investors. And if you cannot take the attention of deeper-pocketed investors, it's very hard for you to realize your dreams of creating a unicorn from this region.
Explain the investor part there. So you have to You have to write tickets of 2 million.
So let me just wind it up maybe. So if you are managing a venture portfolio, you have to have some 10x returns, right? For this portfolio to be financially meaningful for your investors and for yourself as well. And in order to achieve a 10x return in a single portfolio company, that company needs to get at least 50 to 100 million in funding, so that it can reach
over its life cycle.
Over its life cycle, so that it can reach a certain level of valuation. And that 50 to 100 million doesn't exist in this region, unless you are doing something in B2C space, like in gaming or like in e-commerce retail, which is Trendyol. And, we do have Turkey has a lot of success stories in those two fields, and fintech too. So in order to get, but again, those numbers, they come from overseas investors. And in order to get their attention, you need to show certain level of traction, and you need to show certain level of company structure. I mean, with your co-founding team, with your engineering team, or with the product that you are building.
Okay.
And in order to achieve all these, you need at least 2 million, because otherwise, and we have witnessed this very closely in our portfolio too, what happens is that you get funding sub 1 million. And you try to build the product, you try to do fundraising, you try to understand your go-to-market strategy, and you try to cater to your customer needs at the same time with very limited resources. And then you end up in this like vicious circle.
Underfunded. Maybe you cut some corners to try to save the day, and you're not really building the way you need to, perhaps.
Exactly. And then falls into this like great product, great company, but not enough traction. So you have this like vicious circle. Okay,
so to enable to attract the next round of funding, you need at least 2 million. You're saying of investment
next round of funding too, but also to establish the company that's stable, that gives you enough platform to build upon. And when we look at the region lacks this. Like, there seems to be a lot of investors, but those investors, they typically write 100 to 1 million is higher, 100 to 500K checks.
Or even smaller people writing 25,000.
But those are like angel level, but yeah, still. And if you don't have enough quality seed opportunities or deals or investments in a region, then it's very hard for you it's just unrealistic for you to have the expectation that you will have enough Series A deals, right? Because it's a funnel math. And what ends up happening is that right now, if you have a good Series A company established by a Turkish team, either in Turkey or in the US, you have no problem attracting capital for that. Right now our portfolio is in talks with 4 US-based funds for Series A deals, right? So, and
once you get to that level, it's a global market.
It's a global market. So
for capital.
Exactly. So you can still find enough investor interest. Of course, if you are in Turkey, it's a little bit harder, but still, you can still find money if your company is sound enough.
So you're focusing on.
So that's why
building strong at the pre-seed stage, pre-Series A. Sorry.
Exactly.
Pre-Series A stage to get companies to be solid companies that can then attract capital from abroad if they need.
And we didn't want to be in a situation where we are competing with index partners or, foundation capital for Series A or like Goodwater for Series A, because we cannot compete with those folks. So then we said that let's establish Metis Ventures as a truly Series A transition fund and make sure that our the companies that we invest in get enough support from us in terms of fundraising and in terms of establishing that structure with governance, with go-to-market strategy, etc. Not from our team maybe, but through our venture partners, so that we can create alpha for our investor base by finding the right or backing the right entrepreneur, giving them with the right toolkit so that they can do a well-deserved Series A, a double-digit well-deserved Series A.
Super. And you mentioned the region as well. You have a partner now in Romania, did I get it right?
Principal, who is going to be partner with the once we do the final close of this Metis Venture Fund, in Mircea, and we are looking to onboard another partner level, like principal level person from the region, because we believe when you are in pre-series A stages, it's still a very local business. You have to understand where the founder is coming from. You have to understand their motivations. So that's why we want to diversify. Like if our portfolio is diverse, so does our investment team needs to be. So that's why we have regional team on site.
That's great. For the Metis Ventures fund, your LP base, does it include DFIs and institutional investors, or is it Turkish? Is it foreign?
As most VC firms, we are in talks with DFIs, and they seem to like us. We like them too. So it looks like we are getting good traction from them, and we hope to include them in our final close or the second close of the fund. And we do have some LP base coming from overseas, non-Turkish, regional banks, and we are also in talks with an insurance company, but mostly our investor base is Turkish, which is normal, and Turkish institutionals. We do have a couple of LPs which we love, which are exited investors. We love working with individuals who have exited their businesses to large PE firms or through IPO or through strategic acquisitions, because they love giving back to the community. And Bülent Bey is a great example, who exited Airties, and now he is involved with our portfolio companies as well. So
that's a really good point. There's a trend also for exited founders to start their own funds, which I think is great as well. But I think it's really valuable to have experienced exited founders, operators who are LPs, because the sophistication of LPs helps funds as well. All the parts of the puzzle kind of help each other. To have smart LPs, just like for startups, it's useful to have smart VCs, right? They talk about smart money. I think for the VC fund industry, it's great to have exited founders as LPs too. I think they bring an important kind of
absolutely, and we have leveraged that through Logo Ventures, actually, in a much large scale, because having the team, Logo C-level team, as well as through TechBlood, help us guide through and help our portfolio guide through some of the struggles and challenges was really priceless, actually. That's why I think that's very important. And also, Logo team, they always say that we have done so many mistakes and we have burned so much money in doing so. We just try to convey that, transfer this know-how to our portfolio companies to make sure that, they don't do the same mistake. They will do mistakes, of course, but they don't do the same mistakes as we did before. That's why we value those relationships as well.
Being regional focused, it gives you a chance to kind of compare Turkey and the other countries in the region. How do you see the next 5 years, 10 years for Turkey in the region?
I think it's very exciting. Regardless of what's going on right now, across Turkey, there are two wars going on, unfortunately, around us. But I think this investing in tech and investing in venture kind of gives you a long-term horizon. We need to be thinking about what's going to happen 5 years, 8 years, 10 years from now. So that kind of helps us manage our day-to-day decision-making, at least. So when you deconstruct the elements that are needed to build a successful company, I think we have that in Turkey and in the region. Well-educated people, ambitious and driven people, they lack some of the similar aspects, both entrepreneurs coming from the region as well as Turkish entrepreneurs. They lack capital, and they lack most of them go-to-market strategies because they haven't done that before. That's why. When you look at more developed markets, especially in the US, you see, and especially in the Valley, there is this know-how transfer from peer to peer, from firm to firm.
How to set up a sales team, different types of go-to-market strategies.
Exactly. I think that's what this region lacks. And that's not because our entrepreneurs are unsuccessful about that. That's because they haven't seen that happening next door. But I feel like this decade kind of changed that because our entrepreneurs became more global. Now they're also opening offices and they're sending teams, co-founding teams in the US or in their target market. So that helps them attain that transfer. There are a lot of good Turkish individuals who are working in large startups in the US, in Europe, in London. So that kind of helps them get that know-how and knowledge. And so that's why I'm really optimistic about Turkish entrepreneurship ecosystem. And I think we have seen to observe that from the success stories that we have in our portfolio, and overall the general ecosystem realized in the last several years.
Is there a most recent investment you made that you could share?
I believe the most recent investment that we did, we haven't done any investments yet from Metis Ventures. They are still in the pipeline. We have 2 term sheets out now, and we are working on the post-term sheet DD kind of phase with both of them. So they will be announced soon, hopefully right after the first closing of the fund. In terms of the most recent deals, there's one that is not announced, but we have been waiting for it for the last 6 months. The main reason is that we wanted to be a part of a larger round. Now they got a financing from one of the top tier US-based VCs. So it's a great story, actually. So I met with the founder a couple of years ago through one of her previous investors. So he introduced us. He told me that there's this Turkish girl you have to meet, which I backed, and she's very successful. Both of you guys are from Turkey and women, so you should meet. I said, okay, sure, of course. Then we met with her. She wasn't working on something in particular. We just, exchanged notes, but we kind of kept in contact. And I think more than a year later, we just touched base again. And now she was building something very interesting with her co-founder, who's Italian, and he has a PhD. We decided to, give them the necessary capital to keep them forward. And then they got into YC, and at the graduation of YC, now they got a healthy round from one of the top tier prominent investors from the US. So that's not announced yet, but that's one of the deals one of the investments we just learned about.
You invested prior to them going to YC.
Yeah.
So you got in at a good time. Yeah, now their valuation, successful YC company probably.
Yeah, it's there was a quite sharp increase multiple from our valuation. So that's a very good example. And I love the fact that she's a woman. And I try to tell this out loud in every podcast or TV show that I'm invited to, that when you look at Turkey, not most, but maybe 50% of our unicorns are backed by women teams. They're woman co-founder. Now with this one, it's again another...
Spike Games, Rino Nur, Insider, Hande Çilingir.
Trendyol, hepsi burada. They all have women founders, which I love. And I love, talking about this. Yeah. It's amazing, especially this news coming from Turkey. And also what we did is so one of our recent investments, Vectroid, we backed Talip in his new venture, and maybe you know him. He established Hazelcast before. Okay, yeah. You probably know Hazelcast, and now we backed Talip's new venture. So the way that we found out about Talip was also very interesting through our platform. It was the first investment from our data-driven platform that we built, which is a huge database of Turkish and regional entrepreneurs, which gives us signals customized based on our own algorithms, which are not scientifically proven, but we think that they signal or that algorithm kind of signals us to the right direction so that our team can make sure that they are the early bird and they don't spend a lot of time with teams or opportunities that are not fitted for our thesis. And Talip was one of the deals that we found that way. So that's also worth mentioning.
So I was going to ask about that. You talk about being a data-driven VC fund. This is part of that, collecting data on the founding teams and sort of using that to identify them early on and have a strong deal flow.
It doesn't have to be founding teams. It can just about an individual, which we also try to track them before they establish companies or in stealth mode. It's essentially a signaling platform that gathers a lot of data from different databases, and we create our own data pool, and we structure that data based on our own thesis, the areas that we invest in or the type of entrepreneurs that we want to work with going forward. And we kind of narrow that data into a box, and we apply our own algorithm, and that creates a short list of entrepreneurs and founders that we need to be in talks with if we have not reached out to them already. It kind of gives us an edge. On top of that, we also have our own scoring based on the team composition, the market size, the trends, based on Gartner's trend analysis, etc. We try to include it's a multi-factor decision making, but it just helps us with the signaling, right? And then afterwards, it's again, they kind of call this methodology as augmented VC. It's data-driven meets with your traditional analysis, because I think it's very hard to make or build a VC firm or make your decision making based on just data-driven input and output. So we try to find the best of two worlds in our platform.
Very cool. A separate tangent, but I think the data aspect for VC is important on a industry level as well, because it's fairly opaque to people outside the industry. You don't always have access to the performance data of funds. And I think that's actually an opportunity for the Turkish ecosystem as it's developing. I mean, it's still new enough to the point that I think almost no funds have run out their full cycle yet, but especially as the first kind of wave of funds finish their life cycle, it'll be important for there to be some sort of ranking so that the better firms can bubble up to the top and people can start to understand, the LPs, the investors in the Turkish funds can start to have a sense of what funds are successful, which managers are successful, and that'll help for the next kind of cycle. Different ecosystems have different systems for gathering data, but I think there's an opportunity in Turkey for the funds to kind of, for it to be a little bit more transparent than maybe in other ecosystems, and that would help the better firms to bubble up to the top.
Yeah, so I mean, I think right now, as you mentioned, like Turkey, it's still like Turkish ecosystem is still crawling, right? Both there are like limited number of Series C companies, for instance, right? Or there are limited number of firms who fully deployed their funds and then fully divested their assets to do capital return to their LPs. I think it will be very interesting to see which firms are going to be able to establish a franchise. There are some very good firms who have started to do that, launch their second, third funds, but I think more will come as well. And also it will be very interesting to see more Series A, Series B deals in the market, because that's what you need in order to continue investors' interest. So when you look at the Turkish market right now, most of our LP base is still public funds, either the Turkish government-backed or the DFI-backed funds. We need to find a way to attract private capital to our ecosystem. That's how we can make sure that it's sustainable. That's how we can.
So that's part of a way to do that, right? If you have,
Exactly.
if you can show the returns,
Exactly.
then that'll help attract.
It takes time. It's a long-term business for sure. Yeah.
Last couple of questions. Is there anybody you would want to make a shout out to, mention in the industry that has played an important role in your view?
Bülent Bey is a great example. Bülent Celebi is a great example, who is they have done the full circle, right? They have invested, they have started the company, they have sold the company, and then now they are investing back some of that portion back into the ecosystem. Same as Tuğrul Tekbulut, who have started the company, invested in different startups, who also IPO'd his business, and now he also started another company, by the way.
Going off on a tangent, it's an interesting case study or example, because there are still rather few IPOs of tech companies on the Borsa Istanbul. Mm-hmm. But Logo is one example. They've successfully IPO'd on the local stock exchange. There's been quite a few IPOs actually, but few of them have been tech companies. Do you see that as a path that would increase going forward, or are you kind of more focused on other exit paths?
What Logo did at the time was quite impressive, right? Because when I looked at Logo's history, they have onboarded the private equity investor, then they did IPO, and then they acquired another business in Romania. And they have also done quite a bit of acquisitions in the Turkish market as well. So they have a different path that they pursued, and it's quite ambitious and quite interesting to follow. But when I look at the Turkish market, I think the local market is not deep enough for us to rely on for healthy exits, and it's quite cyclical. So it's very hard for long-term investors to establish our scenario analysis or our exit expectations based on such market behavior. In most cases, and which we have done it previously in our existing three vehicles, is that like strategic investors, they come in and buy Turkish companies. Like Blue TV was one case. A public company bought it, Warner Brothers, which is listed on Nasdaq. They bought us out. 3D was another example, which was Zoometry, which is a Nasdaq-listed company. They also bought out 3D because they wanted to do market entry to Turkish market, and they decided to do it through acquisitions. So I think that's one of the case for us, if it's a company that's established in the local market. Another case is that there are several regional plays in our portfolio, which are like companies that are adding adjacent markets into their portfolios, like Turkey and MENA, or Turkey and Romania, Eastern Europe, etc. I think those can be our exit strategy for those are either getting listed in the London Stock Exchange, like in a global hub close to this region, or getting acquired by a global company that wants to have exposure to this region. And then there are the US focused or UK focused investments in our portfolio, which is like 80% of our strategy, is to essentially back entrepreneurs from this region who are targeting to establish either UK or US based firms. And for those, our scenario analysis, typically it's either, a full throttle IPO in their local, but in the US or in the UK, or be acquired by big tech for their tech or customer base.
Last question. What do you see in the region that everybody else seems to be missing?
Oh, that's a great question. I want to say women entrepreneurs, because I think no one has this, no one even mentioned that almost 50% of our unicorns are backed by female entrepreneurs. I think we should continue to invest in women entrepreneurs. One thing that we did different was data-driven. Together with Yiğit, we decided to spend our own, hard-earned and slim management fees into this project. And right now, we are spending almost as much as our investment team. We are spending for the data-driven team. We have 3 engineers on board and the project manager for this project full-time. And I think the impact aspect of it. So we were first to publish our own impact data, both for our portfolio companies as well as ourselves for our firm. And when people talk about impact, everyone thinks about, another like carbon footprint, etc. Right. Those are very important too. But what we kind of try to focus on is the governance aspect of it, which is very important in the life cycle of a company, because that transition into being a startup to a Series A, establishing some checks and balances in your board, also establishing your board, all these things actually add value and kind of helps you to build investor confidence as well as customer confidence. So that's why we highly emphasize the importance of G in that ESG frameworks. So those are things that, we focus on, but I don't want to say we are the first or we saw it when everyone didn't saw it. I think these are pretty, it just be prioritized first and the others. Yeah.
That's important. This is a really fun conversation. Thanks for joining. And it's really exciting to see a venture firm kind of being created in real time. As you say, it's an entrepreneurial journey as well, building a firm. So thanks for sharing your VC journey with us.
Thank you. Thanks for having us.
Wonderful.